If you bought your first home way back in 2008, get ready to cross a financial finish line you probably forgot was even there. Yep, a really unique 15-year tax obligation is finally coming to an end.
I mean, think all the way back to that year. It was a crazy time for the economy, right? And the government stepped in with what felt like a real lifeline for new home buyers. If you took them up on it, you've been dealing with a small but steady line item on your taxes ever since.
Well, guess what? That long journey is over. The book is officially closing. So let's break down exactly what you need to do on your 2024 tax return. That's the one you'll be filing in 2025 to shut this chapter down for good.
Okay, so before we dive into how to make that final payment, let's do a quick rewind and remember what this program actually was, because how it was structured is the whole reason it's been hanging around in your financial life for so long.
Here's the most important thing to remember. The 2008 credit was not a gift. It was never free money. It was designed from the very beginning as an interest-free loan from the government. It was a quick cash injection to help people out during the housing crisis, but the law always said you'd have to pay it back over 15 years. And you know, this is where almost all the confusion comes from. A little later, the government created new credits for homes bought in 2009 and 2010, and those were basically grants. You didn't have to pay them back unless you sold the house really quickly. But that 2008 version, it was always a loan. And that's the one we're talking about today. And man, what a long loan it's been. If you took the full $7,500, that worked out to about $500 every single year on your taxes, starting all the way back with your 2010 return. And now that 15-year window is about to slam shut with this upcoming tax season.
All right, let's get into the practical stuff. For most of you out there, making this last payment is actually going to be pretty simple.
This is the big question, right? What exactly do I have to do this year to be done with it? Well, thankfully, for most people, the process is pretty straightforward. So here are the steps. First, you've got to figure out your final balance. You'll need to dig up your old tax returns and see what you've paid since 2010. Your last payment is just whatever's left. Second, you just report that final amount on line 10 of Schedule 2. And third, and this is a really big deal, if you're just making a normal final payment, you do not need to attach Form 545 anymore. Let me just repeat that because it's important. If you've been living in that same house this whole time and you've been making your yearly payments, the process is incredibly simple this year. You just report the final amount you owe on Schedule 2, and that's it. You're done. No extra paperwork. But look, 15 years is a long time. A lot can happen. So let's cover the exceptions. The situations where things get a bit more complicated and where that special form 5405 makes a comeback. The first big exception is something called acceleration. Basically, if you sold your home in 2024, or maybe you turned it into a rental property, or you just stopped living there as your main home, the repayment schedule speeds way up. The entire rest of the loan balance becomes due all at once on your 2024 tax return. Now, there's a really important protection built into the law for this. If you sold your house to someone you're not related to, the amount you have to pay back is limited to the profit or the gain you made on the sale. And get this, if you actually sold the house for a loss, the rest of the debt is completely forgiven. This was a critical safety net for people who ended up underwater during the housing crisis. And there are other big life changes to consider. For any of these, you absolutely must file Form 5405 to let the IRS know what's going on. If the person who claims the credit passes away, the debt is forgiven. If it was a joint credit, the surviving spouse is only on the hook for their half. And in a divorce, if the house gets transferred to your ex, the responsibility to pay back the credit goes right along with it. Okay, so let's talk about making sure this whole thing is really, truly, officially over. And more importantly, how you can protect yourself from any potential mistakes down the road. So how do we know this is really the end of the line? Well, the proof is right there in the IRS's own paperwork. If you look at the draft tax forms for next year, tax year 2025, you'll see that line 10 on Schedule 2, where this repayment goes, is now marked reserved for future use. In the tax world, that's basically the tombstone for a program. They are literally taking apart the machinery to collect this money. Now, this is super important, so I need you to listen closely. The IRS used to have this nifty little online tool where you could look up how much you still owed. Well, that tool is gone. It's been retired. What that means is the burden of proof is now completely on you. It's your job to track your own records and calculate your final payment. And trust me, you're going to want to keep good records. Why? Because the IRS's automated systems have had a ton of problems with this credit over the years. They've been known to send out incorrect notices, like this CPO3C you see here, demanding money from people who didn't actually owe anything. And I'm not talking about a few isolated mistakes. A report from the Treasury Inspector General found the computer errors and just plain bad data caused about 80,000 taxpayers to get these wrong notices. A lot of them went to people who bought homes in 2009 and never even had to repay the credit in the first place. So please keep your documents handy just in case. Okay, to bring this all home, let's just run through a quick and easy final checklist. This will make sure you get everything right when you sit down to do your taxes. Let's walk through it. Number 1, double, triple check that you bought your home in 2008, not 2009 or 2010. Number 2, calculate your final balance. You got to use your past tax returns for that. Number 3, and this is the big one, ask yourself, did I sell or move out in 2024? If the answer is no, you just pay what's left on Schedule 2, no Form 5405 needed. If the answer is yes, then you absolutely must file Form 5405. And finally, number 4, make sure your tax software or your accountant knows this is the final payment so nothing weird carries over to next year. And just like that, a really unique 15-year financial experiment is finally over. It was a product of its time, wasn't it? A complex lever the government pulled during a massive crisis. And as everyone makes their final payment, it kind of leaves us with a pretty fascinating question to think about. What does a program like this, with its incredibly long administrative tail, really teach us about the true long-term impact of government stimulus?